All right, welcome aboard to GAR Capital and our weekly recap and preview. My name is Carlos Garcia. I'm the founder and CEO of GAR Capital. Great to have you here. Happy Sunday evening, everybody. If you are new to the channel, welcome to GAR Capital, where we talk about the stock market, macroeconomics, commodities, and day trading setups. If you like what you are watching, give that like button a hit and subscribe and turn on notifications for our future videos. We do videos every morning as well. It's called The Morning Note. We do it live on Instagram and on YouTube. So make sure you're not missing any of that. All right, first I want to get started with an announcement. I want to apologize for the lack of videos and podcasts lately. We had Hurricane Milton hit Central Florida. All good over here. Still working fine. Nothing's happened to me. But again, this is why we have a team. GAR Capital, not Carlos Inc. for a reason. So the team stepped up. Everyone was taken care of. And as long as the stock market's open, we are as well. Hurricanes be damned. So let's go ahead and go over this week's results for our options members. Here we go to this is our Discord server here. If you are interested in joining our option signals group, make sure to go to our website, www.gar.capital. If you're interested in our free service, which is the live market blog, take a look at that. It is scrolling at the bottom of your screen. Click free plan. We would love to have you on board. We got about 1,931 members. Trying to get to that 2,000 mark. So we'd love to have you on board. All right, let's get to our option signals recap of the week. We hit NVIDIA, 125 calls, hit as high as 300% in the money. And October 18, 135 calls, hit as high as 40% in the money. We also played ExxonMobil, 125 calls, they hit 40%. Google calls did not hit. We had a headline that hit us, which was the Department of Justice Antitrust Division. That hurt our Google calls, just like the week before with the Iran-Israel headlines kind of hurting our AMD trade. Just unfortunate that it happened, but that's kind of the risk of the market sometimes. Forces outside of your control. That's just risk for you, but this is what we do, and we just have to move forward with it. Got a couple of open trades. We got some Delta calls, JP Morgan calls, AMD calls, and DraftKings calls for December. Went ahead and went over all of it, with our members on our Market Watch channel. This is where I do the play-by-play. We also did the recap of the week on Friday of every single position that we had open and a couple of notes there as well. So again, if you want access to that channel, you'd have to be an Options Signals member. All right, so let's kind of talk about the week in hand. We got a couple of FOMC members speaking, but other than that, we have just earnings this week. We have Goldman Sachs reporting, Netflix reporting, Citibank reports as well, and retail sales on Thursday. So let's go to earnings calendar really quickly and take a look at it. All right, so we got United Health, Citibank, Bank of America, Goldman Sachs. These are Dow components minus Citi. You're going to have Interactive Brokers. Maybe they'll give us an insight to trading volume for the future. Some other banks as well are going to be reporting. Insurance as well. Netflix reports Thursday after the close. That's going to be in focus for sure. American Express reports on Friday. Schlumberger, which is an oil company, Procter & Gamble, Consumer Staples, Ally Bank. So most of the financials coming first. Morgan Stanley I missed. That'll be on Wednesday. We do have some JPM Morgan calls open. They already reported earnings. They smashed it. Great job, Jamie Dimon and JPM. They're not a new all-time highs quite yet, but they'll get there. So great earnings across the board. Let's see if we get that momentum moving forward. We know that companies are making money, profits there. Really the anxiety, I guess, in terms of the market, slow melt up is really just the election anxiety. Polls are very tight. People don't know what's going to happen. Wall Street definitely doesn't know what's going to happen. They haven't really bet one way or another, at least according to the stock market. That's why it's been pretty slow. Guys, there's trillions of dollars sitting in money markets at the moment. I think about 7 trillion. That money has to go somewhere when rates go down. So that's going to be chasing yield. So I expect, again, after the election, that's when we're going to start moving a little higher. So I'll get into that a little bit. So it's really just the pain trade is going to be higher. Bears are going to try to want to short every single move out there, but it's kind of hard to short all-time highs, and especially in a bull market, especially when the Fed is cutting rates. Very difficult thing to do. So until we actually get some clarity or wait to the election, and I think it's the first Tuesday of November, that's when we have some clarity in terms of tax code, in terms of tariffs, in terms of trade deals, in terms of business regulation in general. That's when things get clearer. So really, the only thing that for the next rest of the year is two things that we can really watch. The Federal Reserve, they know they're going to cut rates, and we just don't know when and how much. We're really just parsing: is it 50? Is it 25? Is it November? Is it December? At the end of the day, they're going to cut regardless. Now we're just kind of splitting hairs on when and trying to catch a move when we can. Um, as long as there's not a recession looming, and it's going to be very difficult to have a recession when you have 3% plus GDP. You would need two consecutive quarters of negative GDP growth. The last time we had that was in 2022. That was a technically defined recession, whatever anyone wants to call it. But at the end of the day, we recovered from that. But there is no recession in I guess, the horizon. Inflation is coming down. CPI was slightly above the expectation. PPI was actually at 0.0, so that's good news. So I guess, some positives out there. This is why we are tagging all-time highs, because the market's forward thinking, and I just don't know exactly what the market is pricing in terms of the election, but I can figure that this kind of anxiety, election anxiety, let's just say, is nothing new. We had this in 2020. This is a 2020 chart. This is weekly candles. Um, but you could see August, we had 4 straight weeks of great price action. After the lows of March, this is the COVID lows. And you can see kind of that V-shaped recovery from the drop in September and then October, and then a drop towards the tail end of October. So you had, I think it was, you have August higher, September lower, midpoint pop, and then another hit lower. And imagine that actually broke the 20-week moving average. So again, that was a big level at the time, but it bounced in November right after the election. So I think that's kind of in the malaise, or the kind of careful viewing the market is in at the moment. Once November hits, things are going to be back on track, guys. I mean, whoever wins is going to inherit a great economy regardless. In regards to GDP, labor, corporate earnings, that's just the facts, and that's where we are. So really, there's the uncontrolled risk, which is elections and geopolitics. We can hedge all we want. We can buy all the VIX calls, sell calls, whatever you want. But at the end of the day, the market has been resilient after 9/11, war in Iraq, multiple wars overseas, natural disasters, Hurricane Katrina, for example. Stock market eventually grabbed its footing. And of course, again, guys, the Fed is cutting rates. They're making it easier to be a speculator. Real estate is going to benefit. Risk dollar-based assets are going to benefit because the dollar value is going to go lower. So that's what we've really got in terms of market events, the retail sales number, some earnings. But here is the watch list, the free one that we have for the members, for everyone on the server. Let's take a look at it together. TQQ, let's start with that. This one's going to be pretty simple. You got an ascending triangle here, right? 75.24 would break the kind of the September highs, let's just say. I think it's just September highs. Once we break that, got to till 80, right around there. So anything between 78 and 80, depending on the volume, is what we can trade. Now, will that happen next week? We can also buy some time as well. So again, all of this is volume dependent. We're kind of looking for something over 1,000 in volume. So let's see if we get that break on TQQ. This is the triple leverage QQQ, the NASDAQ 100. Let's take a look here at Micron. Micron showing a nice inverse head and shoulders, but it hasn't set itself up yet. Inverse head and shoulders is a bullish sign. We are above the 200-day moving average on Micron. We got the 100-day moving average at 112.58. If that does break, then I'm looking towards 120 as a next target. We also have 126 or so as your gap to fill here on the daily as well. So we want to make sure that this inverse head and shoulders actually plays out and doesn't reject. But at least the 100-day moving average will give us a little bit of clarity. Again, we're looking for options with good volume. Doesn't have to be this week, for example. Let's take a look at GLD. This is gold. And again, gold gets its basis of value due to scarcity. Again, you can't print more gold. You can print dollars. So if the dollar value goes down, I'm going to pivot now talking about the dollar here soon, but GLD gold will benefit. And you can see this downward wedge or flag or whatever you want to call it. That's going to be higher. So we're looking for 246.50 to break. We're looking for possibly anything up to the 250 strike. My assumption is that the gold volume for contracts will be closer to the next Federal Reserve rate decision, which would be, I believe, November 8th. So up to that point, you're going to start seeing a lot of activity in gold and commodities that are dollar based, kind of either hedging or placing their bets for the next Federal Reserve move. That gives us an opportunity to see if we can play that breakout with good demand up to 250, and then we'll see what we get from there. Maybe let our runners do its thing. Breakdowns are here on the live market blog. We give out 3 stocks that we're watching for the week every single week. That's free for everybody. But we also have our watch list and charts. This is all of our other information that we have for our members. Every time we send out a trade, we break it down on the watch list and charts. We update you guys on the market watch, as you're seeing right here, kind of the play by play as always. For you guys, again, you are not trading alone. You have someone who has your back, a team that has your back. So again, we're here to help in any way we can. So with that being said, one more thing. 10-year anniversary for GAR Capital is on the 17th. So I'm super excited about it. Not many businesses stay in business for 10 years, and that's only because of you guys. So I want to give you my appreciation from the bottom of my heart. I'm going to do a podcast around that day, kind of talking about the ups and downs of the business, stuff I've learned, things I wish I would have done differently, and things I want to do moving forward with the business. It's going to, again, kind of like a time capsule sort of thing. So again, if you are interested in listening to that, we are on Spotify, and Apple Podcasts as well. Just look up GAR or GAR Capital, and you'll see it there. We'd love to have you as a subscriber. That'll always be free. But again, that's going to be a fun one, kind of talking about the history of GAR Capital, how I started, some of the tough parts that I had, the resilience I had to show, and some of the things that I've learned. And I hope you guys give that a listen. So again, the podcast and the YouTube will be back this week again, kind of changing kind of the habits that I had of doing it over and over. But again, you have a hurricane hitting, you got to prepare yourself. So I was all over the place, but all good now. But thank you guys so much for being part of GAR Capital. Because of you, I'm here doing this every day. I love doing it every day. So again, thank you so much for your time. We'd love to have you on board if you haven't been already. And have a great rest of your evening. We will see you guys tomorrow for the morning note on YouTube. Cheers.